participants are Udayan, Economic Analyst, and Omvesh Upadhyay, Akashvani Correspondent.
As per the International Monetary Fund, India is expected to contribute over 16% of global growth as economic reforms in key sectors like infrastructure and digitalization made India a star performer among countries. The report claimed that India's economy has bounced back significantly from the COVID-19 pandemic and is now a key driver of worldwide growth. On the other hand, net direct tax collections rose by 21%. And today, to understand more on this in detail, we are joined by economic analyst Mr. Udayan. Welcome to the program, Mr. Ray.
Thank you so much.
So, Mr. Ray, before we discuss on the IMF report, could you please brief our listeners about the news of nearly 14 lakh crore direct tax collection in the current fiscal year? The robust tax revenue growth seen up by the mid of December accounts for 3/4 of the full year target, indicating the government is on course to meeting its full year target. So, how do you analyze this momentum?
Well, it indicates, at least at a broader level, that we seem to have recovered from the difficult period that we went through because of the pandemic, where economic activities got affected. When economic activities get affected, earnings get affected. When earnings get affected, naturally the tax collection gets affected. When tax collection gets affected, government's ability to put in money away for future use, especially in infrastructure like roads, ports, airports, that becomes a challenge. But equally difficult becomes the challenge of bringing up the living standards of people who are economically vulnerable. So a good tax collection is not just that. In our country, in our reality, it means so much more, because an ambitious country, we have got aspirations to become a developed country. So therefore, a buoyancy in tax collections is always great. It's always great news. But the first conclusion, or if I'm at liberty to make, is that it seems pretty clear now that we seem to have recovered from the kind of difficult situation we were in during the pandemic. And this is indicating a good health of the economy. Things seems to be, especially the larger, more organized sector, which typically pays more tax, they seem to be growing. Because if you're growing well, then you'll pay more tax. That's number one. Number two is because of the digitization of the whole tax collection regime, the tax administration, the regime through which you collect information, analytics that you do in terms of whose tax liability is what, and your tracking becomes easier. Because of that, what's happened is everything has become much smoother and smarter. And therefore, sometimes, what happens is when the system is easy to comply with, then more and more people comply. So if you see the number of income tax returns, ITR filed, latest figure, it's at an all-time high. Although we have many, many miles to go, but when direct tax collections are doing well, that means it's coming directly from the income of either of an individual or the corporate. So it's indicating both. If you ask me that people who pay taxes, they must have earned more, so they have paid more taxes. And on the corporate side, corporates must have earned more and therefore they have paid more taxes. That's how the buoyancy happened. And you're right, because our expenses, our ambitions are more, we have to spend more. Therefore, there's always this danger that we'll spend more than what we earn. So like in a household, you can't do that. Even in government finances, you can't do that, because if you do that, then confidence of investors gets affected, then prices go up. So that's number two, that's important, that if we are spending all that much in infrastructure and other areas, even for some livelihood programs like the Manrega programs, therefore you have to earn enough to both the sides balance. So that's the number two part. The other part is that globally there was an inflation problem. Even in India there was an inflation problem. When your incomes don't match up with your expenses, that's when there's an inflationary pressure. So if your income tax collection is matching up, especially direct, then what happens is the inflationary pressure is all that much lesser. There's removing one reason why price rises will happen. See, what happens is when you have indirect taxes like customs and all that, what happens is everybody ends up paying, keeps getting affected. So what happens is when your direct tax collections are not all that much, or you're lagging behind, you will try to make up in some other way. So when you are doing well on the direct tax front, then you don't have to take recourse to indirect taxes. In any case, we have gone into the GST regime, which is pretty scientific, pretty clean now. So that problem is not there. But that whole incentive to go into an indirect tax, which tends to be inflationary, you don't need to do that. So on those fronts, good tax collection is anti-inflationary inherently. So and when the inflation levels are at a controlled level, then investment becomes easier. You spend more, consumer spends more. People look forward to doing long-term investments. Corporates are there. Foreign investors also look at it in a favorable light because they know that the investment that they are doing they won't have to pump in more forex into a foreign direct investment or any other investment. So all these things are very important, and at a time when, in terms of vitals, so all this just adds up to the sentiment and makes people a little more positive than otherwise.
Absolutely, Mr. Ray, you quite beautifully highlighted that whenever you look at better tax compliance, it's due to the reforms implemented in both direct and indirect taxes that have contributed to the buoyancy in revenue collection. So whenever we talk about GST and the surge in digital payments made the process transparent, and also the expansion of TDS that has helped the authorities in tracking transactions. So being an economic analyst in the field, and you also briefly outlined these forms, how do you see this? How significantly these steps contributed to the stats that we are talking about today?
Absolutely. What happens is, when in the pre-GST era, there were so many economic activities which had least incentive to be part of the formal economy. So when we are talking about formal economy, the economy which gets recorded, activity which gets recorded, and obviously it comes under the purview of taxation. So what GST did was, it brought so much of that activity within the formal economy. Therefore, before there is to be this whole discussion that there's so much of a parallel economy and these activities are unaccounted for. Now, number one, when you're doing something like this, like a GST, which is executed by a very robust tech backbone, even your direct taxes. So what that does is, it makes the whole system more, you can account for a lot, and so all these economic activities come in. Then you're talking about the capturing the various data points, so you're going and buying a home, you're buying a car, you're buying something else. So all these are getting captured by the tax authorities. It's getting shared all over. So that information flow, what it is doing, it is helping people figure out whether an individual or a corporate or whoever, an entity paying tax, is accurately reporting income and accurately paying tax. What it is also doing, the tech backbone is also doing, is it's making sure that refunds come fast. Now, if you see in the last 7-8 years, what has happened is, you file the return and within 2 weeks you're getting refunds. And that is simply because it's coming online. The payments or refunds are happening. Before, that used to come in through a check. Just imagine the kind of revolutionary difference that has happened. There was this whole mindset that tax reforms was about tax rates. From there, the focus has rightly gone into tax administration, how smartly you're doing it, how quickly you're doing it, how efficiently you're doing it, how painless it is, because compliance, the least amount of time and cost it takes, higher would be the compliance. So more you comply with, if you want to ensure compliance, you have to make it very easy so that it's not a pain for that person. So these are very, very important things that have happened. So both the data capture that you're talking about, and GST, which again, the capture is happening, practically every activity that you're doing has got captured by GST in some form or the other. So the formal side of the economy has really increased, and that is showing up in the tax collection. Here, of course, we are talking about direct taxes. In GST also, you're seeing a bounce.
Absolutely, Mr. Ray. And if we talk about the IMF report, in which the International Monetary Fund has also praised India's contribution to global growth, and Nada Chowdhury, the mission of India at IMF, has stressed various reasons for India's steady growth despite the global headwinds. So in the remarks, he says that digitalization, political stability, tax regulations and business policies are conducive to investment and growth, are working in synergy and contributing to India's economic growth. And when we are talking about this in the greater goal of India becoming a developed nation by 2047 and India's commitment to become the third largest economy, how do you see that?
Well, it's only a matter of time before we become the third largest. It's not really going to be a challenge. Where the challenge is going to be whether we can become second largest, which is probably going to be quite challenging because the gap is so much between third and the second. Like right now, China is the number 2 economy and there are like 6 times our size. after a point of time, it's not going to be numbers. We'll be judged by how well we are taking care of our citizens eventually. That whether everybody's getting access to quality education, they're getting good roads, they're getting the best airports. That's what we are going to be talking about. The narrative, the conversation is going to keep changing. Today, if you go to our airports and you go to an airport abroad, you will not see a difference, I'm very sure. So we have really look at our metros, some of our expressways. So eventually we're going to go there. I mean, discussion is going to happen there. Coming back, so when you're 4 billion plus, so becoming third largest it's inevitable. The question is how well we are going to be distributing our gains. And can we keep growing at a very brisk pace? At the moment, we are because of the global headwinds, our growth is challenged because roughly about 20% we are not getting benefit simply because our export markets or international markets are not in the pink of health. So when that health gets reduced, not only do we increase our domestic growth, which we are doing, that upside is going to come in. So when that upside is going to come in, you're really going to see our growth rate going into a higher gear. Right now we're talking about, internally we're talking about 7%, somebody's talking about 6.5%, some people have come up to 6.5%. So eventually we'll probably need somewhere around 8.5% plus. So till the time the global situation improves, where say the Europe and US is okay at the moment, but those people who are our top export markets, they start doing well, and we get that 1/5 extra bounce that we deserve to get, we probably will need to focus on how we can make our internal sources better. So that would mean boosting rural incomes, where government is working on it, getting eligible women, entrepreneurs to start enterprise, ladies who would want to earn some money for their families. So basically increasing women participation, and then of course make sure that we get on to higher skilled jobs, because what happens is if you're doing low skilled jobs, you're earning less. So with the AI and IT related work that's coming in, there are bottom of the pyramid kind of jobs and salaries, and there are high skilled ones. So as a country, we'll have to quickly move on to those high skilled places. We should not be focusing so much on the kind of work and the spaces where people are giving up in the developed countries. Yes, those are great places, but if we want to become a high earning, very, very top tier kind of a looking up kind of a country, we probably will have to, as we do all this, we'll have to make sure. So it's great that if we are producing some auto components, smokestack stuff, but if you're producing high quality mobile phones or mobile phone components or digital sort of stuff for automobiles, those are the areas which will shore up our income and take us there.
Indeed, and as we are entering the concluding stage of our program, Mr. Ray, how might the projected contribution to global growth could impact India's geopolitical standing and collaborations with other nations when we are talking in trade deals, when we are talking about employment generation in India? How do you see that?
We are already being looked favorably. You just have to see the way our ministers and our prime ministers and other leaders of our country are treated, how they're sought after in international meets. The long line of people who are coming down here to talk about economics, Before we used to be a 10th or 12th priority. Right now, we are growing well and we are open to working with others, or simultaneously talking about trade agreements, whether it's multilateral, multiple countries, or one-on-one basis. So it'll work to that advantage. And mind you, it's not just about getting investments in our country. We are also creating jobs abroad. So we have our companies have plants abroad, the most developed countries, whether it's Korea, whether it's US, and we are there. So over a period of time, you'll see that the way our profile is going to get transformed, and we are managing this well. That's a good part. And if we show that in a difficult situation, global economic situation, we are doing well, it just improves our standing. It shows that we've got a lot of good things happening, going for us. And it just, adds to this aura and stature.
On that note, with your insightful inputs, we conclude the program. Thank you so much, Mr. Ray, for joining us today on Akashvani.
Thank you so much.
You were listening to a discussion on significant growth in India's gross direct tax collection. The participants were Udayan Ray, Economic Analyst, and Omvesh Upadhyay, Akashvani Correspondent. This program was produced and presented by the News Services Division of Akashvani.